Hi, so in this video we'll be covering very basic charting skills, trying to understand how charts work, the different types of charts. We won't really be covering any advanced indicators such as the RSI, MACD, or even the moving averages in general. So let's start by trying to understand how they work. So basically here we can see this is the S&P 500 index, ticker SPX. And it's currently trading at 1797.02, but this is the weekend, and so the markets are closed. And you can see here at the top, it's written, the price is written in gray, so meaning it's not moving. So basically, you have three different types of charts. The candlestick charts, which you can see here. So every single bar represent a day in this case. But they look like candlesticks, basically. The other type of chart is the bar chart. Very similar to the candlestick charts. Some people prefer the bar chart over the candlestick, but it really displays the same information, both of them. So again, very similar, just the look is a bit different. And the last one, which is probably the most commonly known, so it's the line chart. Not really used for technical analysis because it doesn't give as much information as the other two types of charts that we just saw. So basically, most people who are looking at charts and doing technical analysis will be using either the candlestick charts or the bar charts. Now in this case, we could see that every single bar represents 1 day of trading or one session. And we can actually change this here depending on the time period we want to look at. So for example, if you want each bar here to represent 1 week, you could choose this. And we can see here that every single bar on the chart represents 1 week of trading. We could also change it to 1 minute charts, okay, so they're called intraday charts. And we can see that every single tick, every single bar here represents 1 minute of trading. And we can pretty much customize the time spans, or the time frames they call it, depending on what we're looking at. See, you can have any type of time frames. You can even create new ones, basically with different time intervals, different time spans, and it's really customizable. And it all depends on what you're looking at and how long you're going to be holding the investment for. Now, just for examples, let's switch back to the daily chart. This is the daily chart, and it's basically, I chose a time period to be 1 year, as you can see here, so day to year. Now, let's take a look at what information we can actually get out of these small candlesticks. So we can see here the green candlesticks are called bullish candlesticks, and the red candlesticks are called the bearish candlesticks, obviously. And basically on the green sticks, let's take a look. Alright, so let's find a good example. Trying to find. Okay, so this one here is a pretty good example. If we could zoom in even more. This one here is a pretty good example. The lower part of this part here, the lower part of what we call the wick, which is the small bar that pops out up and down. These are called the wicks. So basically, the bottom of the wick represents the lowest price on the day, and the highest the highest part of the wick represents the highest price that the stock reached during the specific time period you selected. And basically, the lower part of the rectangle you see here represents the price at which the stock opened on the day or the time period, and the upper part of the rectangle specifies the time, the price at which the stock closed for the specific time period. So here we could see that if I look at which price it opened at, you could see around 1769.79. So it opened at that price. The lowest price for the day was approximately 1767.78. The highest price for the day was 1773.4, and it closed at 4:30. It closed at approximately 1772. So that's why they're so much better than line charts. We pretty much got 4 different pieces of information from a single candlestick, which is something you can't really do with a line chart. And now it's very similar to the bar chart. Let me just switch here. The bar chart pretty much tells you the exact same thing. So the little bar here to the left, if we can zoom in a bit more. So the little bar here to the left is the price at which it opened. The bar to the right over here is the price at which it closed. The upper kind of part, the part that's kind of going over the closing price, or the wick once again, is the highest price it reached. And if it were to go down, if we could see here, the lowest part here would be the price at which the lowest price at which the stock traded for the day. Now it's the opposite for bearish candlesticks or bearish bars. We can see that if it's red, it means it's bearish and the price went down over the day. So it opened at a high price, closed here at a lower price, which is why it's a bearish bar. The highest price is here and the lowest price is here again. And we can switch back to the candlestick charts. So basically it opened here at this price and it closed here. The highest price reached was the highest point on the wick to the upside. The lowest price reached is the lowest part on the wick to the downside. And that's pretty much what we can get out of these types of charts. So there are 3 possible types of trends. Obviously the uptrend, the downtrend, and lastly the horizontal trend, which is not really as popular as the other 2, but you can still encounter them when investing or trading. So let's start with the uptrend. Right here is a perfect example of an uptrend. Basically an uptrend, the real definition is a set of consecutive higher highs and higher lows. Obviously there could be what we call corrections or pullbacks, but I'll start with the textbook uptrend. So basically this right here is a very good example of an uptrend. We have let's start by looking at the lows. So as we saw, the lows are the lowest part of the bottom wicks here, so the pointy parts. So higher lows, first of all, so this is the first low. Second low is higher. Here the low is even higher, obviously. Higher low once again, and higher low, higher low, higher low, and so on. Now let's look at the highs, quite obviously. Higher high, high again, higher again, higher, 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 and it goes on. So basically this is really a textbook uptrend. It's a perfect uptrend. Now obviously it won't always be this perfect. Sometimes we have things that are called corrections or pullbacks. This is a good example. So we can see here that we have higher lows, okay, but there's this red candlestick, or this bearish candlestick here, and it's what we call a pullback. So we have an uptrend here, a small pullback or a correction to the downside, but nonetheless the trend continues and picks right back up with a new series of higher lows and higher highs, and that actually happens quite a bit. If we move on here, we could see, right, an uptrend, a pullback or correction, and another uptrend. We could see here, let's try to find another one. Okay, right here, right? Clear uptrend, and then there's a red candlestick, which is a correction or a pullback, and the uptrend resumes. Now for the downtrend, it's pretty much the exact same thing, but it's the opposite of an uptrend. It's basically a series of lower lows and lower highs. And let me try to find a good one here. Okay, here's a really good one. Zoom in here. So here we could see this is a very good downtrend. We have lower highs. So this is the first one. Lower, 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 lower. So always lower highs. Now for the low parts, lower lows. This one is lower than this one. Lower, lower, lower. And so this is once again textbook downtrend, right? Lower highs and lower lows. Once again, there could be corrections to the upside. Okay. Now we could see here that we have a clear downtrend, and here we have a tick to the positive side. Okay, so the price goes up, and then the trend resumes back down. So downtrend, we have a correction and another downtrend, and this will happen a lot. And traders usually like those types of scenarios quite a bit, because pullbacks usually mean that you could set certain types of orders and take advantage of those types of moves, which is something we'll see later on.